Hey everybody, this is Chris Tyler of OptionsCAT Stock Trading. In episode 7, we have a trading strategy lesson that should resonate with a lot of investors right now. We're going to look at a stock collar and spread adjustment that show how a bullish, actively managed collar can fully protect accounts during larger bearish downswings. And in more volatile market conditions, even allow investors to sometimes be greedy and buy additional shares or long delta spreads at little to no cost when others are fearful and panicking. But first, and before we dive into today's video, Applied Digital and its APLD stock are a very heavily traded AI play. Will it be the next Nvidia? Probably not. But when a smaller capitalization tech company is making a niche for itself in the space and Nvidia holds a direct investment in APLD, well, maybe you can't help investors for getting just a little bit excited regarding its business and stock prospects. So on March 11th, in the broader market correction, hitting a bearish crescendo with the VIX Fear Index spiking just shy of 30% in back-to-back sessions, and APLD stock making its own bearish and fearful overtures on the price chart, I put together a collar variation, with shares having corrected a full 50% from a high of about 1250 in late February, and broken all kinds of well-watched technical support in the form of trend lines and Fibonacci levels. Shares were purchased at $6.32 in conjunction with buying protection at the $6 strike with the April put for 90 cents and selling an out-of-the-money $9 strike call for 40 cents to help finance the cost of the downside insurance policy. Additionally, and given the trading extremes in the market and in APLD shares, I took the fully protected collar and tweaked it by selling more premium well below the stock price at the $4 put strike or 18 cents. The end result of all four legs, or the combination, is shown on the screen and sized using 900 shares and 9 spreads. Now, while this bear put spread variation opened up the position to much larger losses, the red ink, as we can see on the risk graph, would really only start to get absolutely fugly below $4 a share and even much lower than $4. And mind you, $4 was still 30% below the current low in APLD's correction. As it happened, the market and APLD stock did turn higher. During this upswing, the collar variation showed increasing profits as shares traded further away from the bear put spread and towards the $9 call that was shorted. But it wasn't until 9 days into the position on March 24th and shown on the screen that conditions got to the point where an adjustment was seriously considered and applied, as APLD stock was now positioned with a modest bullish lean and slightly more than midway between the $6 and $9 strikes of the collar variation. Without adjusting, end-of-day prices would have the position up about $850, but intraday on the 24th of March, we bought back the $4 put to capture the bulk of that premium sale and rolled what was now much less effective protection at the $6 put strike up to the 7.5 put. Net adjustment cost a bit of upside profit potential, but that compromise allowed us to get rid of 100% of our downside exposure and lock in a small profit no matter what happened next in APLD stock. Today, and heading into Friday's close and what's been a tough week for market bulls, suffice it to say it's been an even more challenging period for this next Nvidia play. In fact, shares of APLD have traded roughly 8% below the low in place when the collar variation was first initiated. The good news, and as advertised, the adjusted collar remains profitable. We can see that here on the risk graph. And while the smarter trade would have been to close out the position on the 24th for a much larger profit of close to $800, it's important to recognize every trade is a compromise and hindsight is also 2020. The fact is, in an alternative reality, APLD may have rallied higher and the adjusted collar would be sitting on even larger profits than if it were simply closed that day. That said, and still holding the collar, we'll wait for next week to reevaluate our commitment to shares and decide if a fresh adjustment and changing our risk profile makes sense.
Oh,